Testing, 1, 2, 3, testing.
this away
Yeah,
from...
I was like I told you, I will put this on the desk of whoever our new house staffer is. People just don't take subtle hints. Or when you're right back and you're like, hey, if you really want to meet, I can, but once again, I don't handle health, and this is how...
I'll bring up our former health staff there.
Right. Or I can give you the address, office address of our health staffer. Go talk to him. Dr. Jimmy Goodman. Go for it. I mean, literally every healthcare worker has been done during the
One more week.
All I do is say yes or no when someone just boils it down.
I ended up getting all of it. Like I feel like I learned some on the fly.
I mean, I can fake it for meetings, but random sign-offs, I'm not going to sit and read all of this. That's someone else's job to like boil it down and make a recommendation, and I'll read their recommendation. And writing.
Wait, no.
Subcommittee will come to order. Welcome to the Ways and Means Subcommittee on Tax Policy, our hearing on how tax reform will simplify our broken tax code and help individuals and families. Before we get started with opening statements and so forth, I'd like to yield to the chairman of the Ways and Means Committee, Congressman Kevin Brady, for the purposes of introducing a distinguished witness who's before us today. Mr. Chairman?
Thank you, Chairman Roscom. First, thank you for your leadership of the tax policy subcommittee at such an important time in America's history, and thank you for leading hearings like this that allow America to have the conversation about creating a bolder, fairer, flatter, and more pro-growth tax code. I want to thank all our witnesses for being here today, but I want to give a special welcome to our friend, my friend, Chairman Bill Archer, former leader of this committee and a longtime mentor to me personally. Chairman Archer, thank you for being here to share your insights and your experience on tax reform. I know everyone on our committee is familiar with Chairman Archer, but I'd like to take a moment to talk about him and his legacy here at the Ways and Means Committee. Chairman Archer served on the committee for 28 years and was chairman from 1995 to 2001. During his service, Chairman Archer was closely involved in several historic efforts to make our tax code simpler and fair for all Americans. Prior to becoming chairman, he was a strong voice in developing the Tax Reform Act of 1986, fighting throughout the process to lower rates for Americans and eliminate complexity for taxpayers. And when he took the gavel in 1995, he brought that same passion and determination and insight, always striving to ensure that our tax code worked for the American people, not against them. And he was a chairman, long before software, that did his own taxes year after year. So he knew intimately the complexity and the cost of this complicated code. So in many ways, Chairman Archer's leadership helped lay the foundation for the kind of pro-growth, bold tax reform we are pursuing today. And for me, his leadership often serves as a source of inspiration as we work to fix our broken tax code for families and individuals. When Chairman Archer retired from Congress, I had the honor of being selected to his seat on Ways and Means. Now it's my great honor as chairman to welcome you back to the committee. Chairman Archer, thank you for your decades of public service, and thank you again for joining us today. We have so much to learn from you, and we're excited for your testimony.
Thank you for that welcome, Mr. Chairman.
Thank you.
And thank you for the job you're doing on tax reform.
Thanks, Chairman. I yield back, Chairman Roscom.
Thank you, Chairman Brady. Think about it. Right now, on this iPhone, I can pull up an airline app. I can click a flight to O'Hare Airport. I can choose a seat. I can get an e-ticket mailed to me on my iPhone. I can have it charged to my credit card, and I can get a boarding pass, all within the twinkling of an eye. And if I have 10 seconds of that little loading thing spinning around, my attitude is, oh, what loser made this? Now, it's ridiculous. And yet we have an expectation of ease and simplicity that is basically the norm right now. Now, contrast that with our tax code, which is so complicated that every year the majority of taxpayers can't figure out how much money they owe by themselves. Our tax code has grown so bloated over the past 30 years to the point that it's draining our productivity and producing a headache for nearly every taxpayer. Now, there's good news. Nobody likes it, and nobody defends it. There is nobody in this country that says, oh, the Internal Revenue Code, I love that. Don't make any changes to that. Nobody likes it. Now, people like certain elements of it, and we have deep divisions among us about the directions that we should go, but it's so interesting that nobody's defending the status quo. Now, there's better news. We've got a solution that'll grow the economy, dramatically simplify the code, and lower our tax bills every year. Last week, we discussed the importance of growth. Taxpayers, according to the proposal that we've set forth, would see growth from tax reform in the form of an estimated 1.7 million more jobs and 7.7% higher wages. But today we'll focus on the burden of filing taxes as an individual. Every year, millions of Americans spend hours trying to figure out what they owe. In fact, combined, Americans spend 2.6 billion hours trying to calculate what they need to pay Uncle Sam. And this translates into over $400 billion in lost activity. And what should be a simple calculation is so complicated that 9 out of 10 people either pay a professional or have to buy software just to figure out how much they owe the government. When I think about a household filing their taxes, I think about a family in my own constituency in Palatine, Illinois, sitting at their kitchen table with a box full of receipts trying to figure out what they owe. They're looking at the 1040 and they're trying to figure out what deductions they can take. Can they deduct enough for them to itemize, or do they want to take the standard deduction? Do they qualify for the additional standard deduction? Can they take both the personal exemption for their children and the child tax credit? And when they really get confused about how much they need to pay the government, they can read the helpful IRS guide for individuals, and by page 206, no lie, it starts out with how to figure your tax. The whole time they're thinking in the back of their heads that if they had enough money to hire somebody to do it for them, they'd be paying less in taxes. And that's because for more than 30 years, the tax code has not been updated, and it is ballooned with special interests. The standard tax form, the 1040, now contains more than 80 different items, and the additional complexity is a cost for everybody. Clearly, something's inherently unfair when the family from Palatine perceives that they pay more to the government because they don't know more about the tax code. What we propose for individuals filing is something as simple as a postcard. Now, if you can add and multiply, you can do your own taxes. No more uncertainty, no more worrying if the government will come after you. We'll have this postcard available in an online form and a hard copy form for every taxpayer to use. Why did we make it this simple? And how did we make it this simple? First, we proposed to eliminate all but 2 deductions. Then we took the 7 brackets and reduced them to 3, lowering the tax rate for all Americans in the process. Then we paired together the standard deduction, the additional standard deduction, and the personal exemption for taxpayer and spouse, and we used the savings from eliminating deductions to double the standard deduction, which we expect that 95% of Americans will use that. Finally, we combine the child tax credit with the personal exemption for children and dependents into one larger credit. With these changes, Americans will no longer have to worry if they're wealthy enough to get a better deal on taxes. It'll be laid out in plain English for all to see. Now, as a committee, we've got a choice. We can accept high rates and a confusing code, or we can grow the economy, lower rates, and create a fairer system that Americans can trust. And I think the choice is clear. With this in mind, I'm pleased to welcome our witnesses, and I look forward to hearing all of your testimony and to working with my colleagues on both sides of the aisle to determine how we can create the best tax code that helps all Americans, including my constituents in Palatine and elsewhere. Now, for the purpose of his opening statement, I'd like to recognize my distinguished friend, the ranking member, Mr. Doggett from Texas.
Thank you, Mr. Chairman, for your courtesy, and a welcome to all of our witnesses. Today, we do finally consider the impact of proposed tax reform on individual taxpayers. This is the first consideration of this matter in the 13 months that have passed since the House Republican blueprint was announced. Our hearing coincides with what appears to be the demise of the first Republican tax cut this year, which largely masqueraded as a health reform bill. It's instructive to consider how that bill proposed to assist individual taxpayers. From the more than $400 billion in tax breaks for individuals that is proposed in that bill, those making more than $1 million each year would have pocketed an average of $57,000 apiece. Any small tax cuts for middle-class families would have been mostly wiped out by increased health care costs. It's also instructive to look at how that bill was presented and to hope that lessons have been learned from the approach of putting the bill under lock and key in the Capitol, denying even some Republicans an opportunity to see the bill, then rushing it through without a single administrative official or expert coming forward to testify about the bill or be held accountable for it, all in an all-night session where all Democratic amendments were denied. One would hope that that experience, given the failure of the bill, would not be repeated. However, there is some concern in questions that have been raised in the Senate Finance Committee this same week as to whether any tax reform legislation will be presented for a hearing. Senator McCaskill asked Chairman Orrin Hatch to commit that there would be a hearing on tax legislation and that it would not all be written behind closed doors. I will submit for the record an exchange about that with Senator McCaskill, and I hope that we will not see the same thing happen here in the House and that Senator Hatch will reconsider and make this a more open process. Certainly there is a need to simplify our tax code. Many of the additions to the code have in fact been made in recent years in this very committee, as loopholes and special advantages were offered to some that added complexity to the system. I have authored legislation that is designed to consolidate existing credits for higher education into an expanded American Opportunity Tax Credit to make it easier for more young people and not so young to access college and to use the same credit for job training, as so many Americans are trying to seek new opportunities that will make it possible for them to provide for their family in a more adequate way. This bill would also ensure that students receiving Pell Grants can get the full benefit of the American Opportunity Tax Credit. That's important because at this very time, the House Budget Committee is considering a budget that makes incredible cuts to education and social services, including the funds that are available for Pell Grants. Our ranking member, Mr. Neal, has advanced legislation to make the Earned Income Tax Credit available to the working poor who have no dependent children, an idea Speaker Ryan has endorsed, though not with sufficient enthusiasm to get it passed when it was considered in 2015. Ms. DeLauro, our colleague, has offered a bill to expand the child tax credit. I think each of these offer a potential for discussion, but not if they are only to be crumbs off a table that has been set, like the last tax cut bill, for those earning more than $1 million a year. I think as we look at individuals, it's very important to apply the Minuchin Rule. That would be the rule named after President Trump's appointee, Secretary of the Treasury, Mr. Minuchin, who had said he was not seeking any net tax breaks for the wealthiest few, that he would ensure that while we simplified it and added fairness to the code, that there would not be a net tax cut for those at the top, actually as Mr. Trump had originally proposed and as proposed in the blueprint. I would like to see us follow that rule as we consider simplicity and fairness. And I think that any action we take does have to be balanced against the many wrongs that are being committed as we meet in the Budget Committee to cut back on job training and educational opportunities. Thank you, Mr. Chairman. I look forward to hearing our witnesses.
Thank you, Mr. Doggett. I think you make a couple of interesting points. Let me just comment briefly before I introduce the witnesses. I think the admonition about process is a good one. We know what failure looks like. We know when Nancy Pelosi, as Speaker of the House, said we've got to pass this bill so that you know what's in it, that creates confusion and failure and a lack of cohesiveness. I was on this committee sitting right down there when we were considering the health care bill, when Charlie Rangel, former chairman, was sitting in this very chair. And when he was asked, I think it was either by Dave Camp or one of the other senior Republicans of the Ways and Means Committee at the time, when are we going to hear about the Republican amendments? Charlie Rangel said, soon and very soon. It's a line from a gospel song that I remember as a child. That's why I have an independent recollection of it. And of course, we never got to those points. Now, we're having our fourth hearing on the blueprint. There's been a lot of discussion on the Camp draft as a prelude, a lot of discussion about the blueprint. And I think now's the perfect time to transition to having more insight on this by introducing our panel. First of all, we've got the Honorable Bill Archer, who Chairman Brady already introduced, is the former chairman of the Committee on Ways and Means, and is here as an example of somebody who knows how to craft legislation and bring something to fruition. And Mr. Chairman, we welcome your testimony. Next is Bernard Mckay. He's the chairman of the Board of Directors of the Council for Electronic Revenue Communication Advancement. Next is Janya Stout, practice leader and co-founder of the Fiduciary Plan Advisors at Hightower. And finally, Eric Rodriguez, vice president for the Office of Research and Advocacy and Legislation at Unidos US. So thank all four witnesses. You each have 5 minutes. If you go over the time, I'll be gentle and then increasingly harsh to get you to have some tight corners, and then we will inquire of you. So we'll hear from you in order. Chairman Archer.
Thank you, Mr. Chairman. It is truly an honor to be in this room again.
Chairman, can you make sure that mic's on?
I've pressed the talk button, but it doesn't seem to.
Scooch closer.
How's that? I don't know what else to do, Mr. Chairman.
I think that's better. Just lean forward when in doubt.
All right, I'll get closer as I can. As Chairman Brady said, I've spent many years of my life in this room, and I have a great respect for it and great admiration to each of you who serves today. When I was on this committee, there were many challenges and many opportunities, and they exist today, and they probably will exist 25 years from now. But I think that Congress has perhaps a unique capability to alter the course of our country in a positive and a momentous way. I pray that you will be allowed to rise to the occasion and complete the long-delayed goal of fundamental tax reform, which would simplify and rationalize our tax code. The world has changed dramatically since my congressional service ended in the year 2001. For Americans to compete in the world as both individuals and businesses is in many ways much more difficult and certainly more challenging than it was. Tax rates have risen and complications have increased. I understand that there have been over 15,000 changes in the tax code since the '86 tax reform. That's very difficult for individuals to cope with. And frankly, that figure is probably out of date. It's probably much greater today. I commend the efforts of the committee, and particularly Chairman Brady, for taking the lead to advance the indisputable goal of simplifying the code and helping to make the U.S. a leader in the world in terms of having a tax code that gives our country a competitive advantage in the marketplaces of the world. I count myself as being a fair individual, and all I ever want for this country is a fair advantage. And hopefully that's what we had in our tax code 30 years ago, but we have lost it. In my opinion, it's not enough to achieve tax parity with the rest of the world. As I said, we need to work to develop a clear and competitive lead. The blueprint that was released last year as a starting point for the committee's discussion is a truly comprehensive document and a courageous one as well. It was built in many respects on the actual bill introduced several years ago by former Chairman Dave Kemp. The foundations have been laid for a debate that is long overdue. I know well the vagaries and the twists and turns of the legislative process, but I urge you to plow ahead to develop a comprehensive document that clearly will be the new starting point for this effort. Not only did I do my own federal tax return, as Chairman Brady mentioned, but I did it with a pencil and a yellow writing tablet and not a computer. Believe me, it took a lot of my time. It was very frustrating, but I at least had the help of the staff of the Joint Committee and the Ways and Means Committee to help me when I got into real difficulty. And I did that particularly on one part of the code that related to the tax deductions for members of Congress. There was no form. And so I contacted the Joint Committee and was told, well, we can't give you a form, but I think we can tell you how to prepare one by hand, and I believe the IRS will take it. Well, that's a terrible tax code. I hope that's been corrected since then, but I doubt that it has. I do not in any way belittle the political effort needed to achieve the goal which you seek. But there is a support group of many, many Americans who may not be heard to offset the support group for every special provision that's in the code that you must counteract in order to be able to finally reach your goal. Until recently, one of the real problems has been expiring tax provisions, which required almost annual legislation and whose costs would have to be incorporated into any major bill. I commend the committee and the Congress for having so aggressively addressed this problem in 2015. It was clearly a masterstroke to make tax reform possible. Inherent in this effort was the concept of permanence in the tax code. I urge you to make this the hallmark of any tax legislation. The American public needs to be able to plan and make their financial decisions in an environment where the tax provisions do not change every year. That makes it extremely difficult. I have always described our tax code as an attractive nuisance. And to me, that's what an income tax is. And for those of you who are not lawyers, an attractive nuisance means that whatever you provide is going to, like a magnet, draw in all kinds of complications that are going to be very difficult to resist. And that's what we have today. Sadly, I think every income tax does that. And I'm going to ad lib just very quickly and tell you that I lost confidence in being able to really have an effective and a simple income tax at the end of the '86 deliberations. I personally said, and it's a matter of record, I think we should abolish the entire code and replace it with a consumption tax, to where the individuals in this country do not have to deal at all with the IRS. To me, that would be very, very attractive, but that's a big step, and it's a step that is beyond where you can go. I couldn't make it happen, so I'm sure you're not going to be able to make it happen. But certainly, we need to find a better way than the current income tax. I appreciate the unique opportunity to return to this hallowed environment, the most beautiful room in the capital of the United States, and to be able to address you. I don't have a magic answer for you. I wish I did. I think it's extremely complicated, and I'm glad, frankly, that you're up there today and I'm not.
Thank you, Mr. Chairman.
But in any way that I can be helpful, please call on me.
Thank you. Mr. Mckay.
Thank you, Mr. Chairman and Ranking Member Doggett. I'm honored today to testify on behalf of the Council for Electronic Revenue Communication Advancement, CIRCA, the Electronic Tax Filing Association. CIRCA was launched in 1994 at the request of the IRS to provide a means of collective communication and coordination and cooperation across the tax ecosystem for advancing electronic tax filing and electronic tax administration. CIRCA members represent a wide diversity of industry participants and innovators, from tax software and technology firms to the largest national tax storefront chains, to systems integrators, payroll houses, and financial services companies. We're proud to have been a part of leading the national adoption of electronic tax filing for more than 2 decades. In the 1998 IRS Restructuring and Reform Act, government adopted a public policy objective of achieving 80% e-file adoption by American taxpayers because electronic filing is more efficient, speeds return submission processing, reduces government operating costs, and improves accuracy. And today, almost 90% of all individual tax returns are electronically filed. That accomplishment is a direct outcome of public-private partnership and technology innovation. But innovation in the tax compliance process is not the only thing that's changed over the last 30 years, since the tax code was last comprehensively changed. The makeup of the American family and characteristics of small business have changed and evolved in many ways. Modernization and simplification of the tax code would empower individuals and small businesses to more easily understand their own taxation, and knowledgeable citizen engagement in their financial affairs, like tax, leads to better financial decisions for themselves and their families. The private sector's development of tax preparation software over the last 30 years has sharply reduced the pain and complexity of tax compliance for average Americans, while bringing accurate preparation and speedy filing of returns within economical reach for all, whether taxpayers prepare their own returns or are assisted by professional tax practitioners. Private sector innovation has taken complexity of the tax code and simplified it for the taxpayer. Industries-driven, data-driven innovation and simplified it for the taxpayer by allowing, for example, direct importation of financial data into tax returns at the taxpayer's direction, drawn directly from the original financial data sources. These kinds of technological innovations have made tax compliance faster, easier, and more accurate. However, tax simplification reforms, streamlining the tax code itself, could accelerate greater simplicity and ease of compliance, benefiting every taxpayer. It would be the right policy direction for the nation. We believe simplification reform strategy could begin with thoughtful application of common sense solutions. Within the code, there are unique terms like adjusted gross income, as well as common terms like dependent and income, all of which have different and sometimes conflicting and certainly unique definitions to the code. Using universal definitions and commonly understood language would go a long way toward taxpayer ease and understanding. Similarly, the multiplicity of different tax provisions for retirement and education can leave taxpayers uncertain over what choices are best for them and their individual financial future. The commercial sector knows that the natural behavioral response of a consumer to a multiplicity of options and complexity of choices can lead to doing nothing at all. Industry works to simplify this and has done so for decades, but actually simplifying the underlying tax code would make a big difference and help taxpayers make better decisions for their financial future. In the same way that electronic filing was a public-private partnership, in 2002, President Bush wanted to ensure free tax services were available to low and middle-income taxpayers to reduce compliance burden. That policy objective led to creation in 2003 of the IRS Free File program, which is provided at no cost to either the government or the taxpayer using the services. The result over the last 15 years has been a donation of more than 50 million free tax returns and electronic filings to American taxpayers of modest means. It is operated under standards, requirements, and consumer protections governed by the IRS while ensuring competition and consumer choice. That kind of public-private partnership has saved public funds and saved taxpayer compliance costs. More recently, a public-private partnership between the IRS, the state departments of revenue, and the private sector was instituted to fight cyber fraud being launched against the American tax system internationally. That effort, the IRS Security Summit, has now been underway for more than 2 years, and IRS has reported that it has slashed cases of reported identity theft refund fraud by more than 50%. And to take the fight to the next level, the summit has created an information sharing and analysis center, a tax ISAC, as exists in the financial services sector and the aviation sector as the next phase of the public-private partnership to ensure a proactive strategic defense long-term. As policymakers contemplate tax simplification reform, it will be important that public-private partnership and these divisions of labors be preserved and strengthened. Over the last several years, there's been much discussion about creating a simplified postcard tax return. We would observe that in today's environment, we're really talking about an electronic postcard, as the American tax system has moved well beyond paper. Moreover, an electronic postcard would fully benefit from the essential security safeguards already adopted by the IRS Security Summit process, which protects both the taxpayer and the integrity of the tax system.
Mr. McKay, let's do this. We can continue to inquire, and we're going to be able to get to, I think, the rest of the basis of your testimony. So, Ms. Stout.
Thank you, Chairman Roscom, Ranking Member Doggett, and members of Tax Policy Subcommittee for the opportunity to speak with you about the importance of tax incentives for retirement savings. My name is Janya Stout. I am the practice leader and co-founder of Fiduciary Plan Advisors. Fiduciary Plan Advisors is an independently owned provider of fiduciary advice to retirement plan sponsors and their hardworking employees. I bring more than 20 years of experience in retirement plan consulting for plans of all sizes. I advise 140 retirement plans covering approximately 50,000 employees and $2.4 billion in retirement savings. I also serve as Vice President of the National Association of Plan Advisors. NAPA is the voice of the retirement plan advisory community and is part of the American Retirement Association. The message I want to convey today is that the current tax incentives are working very well to promote good savings behavior for tens of millions of American workers. 75% of households have access to a workplace retirement plan, and 82% of them are participating. The most important factor in determining whether workers save for retirement is access to a workplace retirement plan. Moderate income workers are 15 times more likely to save if they have a plan at work, versus less than 5% save in an IRA if left on their own. Tax reform proposals that freeze retirement contribution limits and cap the exclusion for retirement contributions will discourage small businesses from offering retirement plans. I recommend to all my clients that they offer both a Roth and a pre-tax contribution option in their plan design. A Roth option can be beneficial for millennials and lower wage earners. Having the choice is important. We have even started discussing with our clients the option of doing an automatic enrollment into a Roth source. However, any policy move toward more reliance on Roth contributions must be accompanied by other changes to the tax incentives to expand coverage and benefit security. Expanding workplace plan coverage is critical to building retirement security for the middle class. To this end, I support proposals such as increasing the retirement plan startup tax credit and adding a credit to encourage automatic enrollment. In addition, I support the pooling of unrelated employers into a single plan, an idea proposed by Congressman Buchanan, Neal, Renacci, and Kind. Pooling plans will produce economies of scale by lowering both employer and plan participant costs, which will boost retirement plan coverage. The most significant reduction in retirement security is associated with the cash outs that often occur during a job change. I have helped hundreds of participants figure out how to roll over their retirement savings from an old employer into their new employer's plan. To address this challenge, I support recommendations regarding authorization of a national retirement clearinghouse, which would facilitate consolidation of retirement accounts when employees change jobs. In addition, the committee should consider Congressman Johnson's and Neal's SEAL Act, which permits individuals to continue to repay plan loans if a participant becomes unemployed or their retirement plan is terminated. A Medicare-eligible couple at age 65 will need at least $260,000 in savings for health care in retirement. Health savings accounts are the best way to save for this expense. To this end, we propose providing plan sponsors the option of adding an HSA feature to their 401k, as Congress did when it allowed 401k providers to add an IRA to their plan in 2001. Integrating HSAs into the 401k in this fashion has the benefit of providing participants with access to lower cost investments offered in the 401k and holistic financial advice for savings for both health and retirement needs. I applaud this committee's work to make tax rates on small businesses more competitive by reducing the tax on pass-through income. In that spirit, I want to highlight a technical issue related to small business retirement plans. It is critical that retirement plan contributions by shareholders or partners of pass-through entities be deducted only against the income that is classified as reasonable compensation. The value of offering a retirement plan to employees is preserved when the tax rate related to the deduction matches the tax rate the employee will pay when they retire. Thank you again for the opportunity to participate in this important discussion. I would be pleased to discuss these issues further with the committee and answer any questions you may have.
Thank you, Ms. Stout. Mr. Rodriguez, I let the majority witnesses go over a little bit, so feel free to stretch your legs. You know what I'm saying?
Well, I appreciate that. Thank you very much. Mr. Chairman, Congressman Doggett, and of course I want to acknowledge our champion of our community, Congresswoman Sanchez, for providing a lot of leadership on these issues and connecting it to the real lives of all Americans, but certainly Latino Americans. Thank you for inviting me today to appear this afternoon on behalf of Unidos US. For those of you who don't know Unidos US, it's formerly the National Council of La Raza. It's our new name. So I appreciate the opportunity to be here. For over 2 decades, I've worked on economic security, poverty issues in the Latino community. And this particular topic is very important and, of course, very timely. As you know, the tax code has considerable influence over the economic security and mobility of workers. And a lot has changed since 1986. For instance, at that time, Latinos represented just 8% of the total U.S. population. Today, Latinos represent 17% of the U.S. population. Today, Latinos are 56 million strong and growing throughout the country. But at the same time, Latinos are twice as likely to be in poverty than their white peers, and income and wealth gaps remain quite wide. For instance, in 2013, the average Latino family had just $1 for every 10 in the average white person's household. A congressional rewrite of the tax code stands to either improve or worsen economic and wealth disparities for these households. Moreover, as a previous witness has mentioned, millennials are very important as we look out to the future. 60% of Latinos are millennials or younger. And how tax policy affects them and influences their economic behavior will have implications for the long-term viability and prosperity of the nation. For these reasons, I'm very pleased to be here and represent our perspective on tax reform proposals currently under debate. As you know, the federal income tax is intended to collect revenue to fund important public goods and services. These include defense, veterans affairs, health care, public education, infrastructure, and safety net and environmental protections, among many other public goods that we all enjoy. The tax code can also raise incomes of working class Americans while delivering economic growth, but only if lawmakers are intentional about centering the benefits of reforms on middle class working families and individuals. Over 90% of Latino voters we recently posed favored tax incentives to help them buy homes, go to college, save for retirement, or just make ends meet. Whatever we do in tax reform ought to start with ensuring that revenue is adequate to meet these needs and that tax reforms are equitable for all taxpayers. Recent tax proposals from the administration and House Republicans threaten to weaken the government's ability to protect and serve taxpayers and will unfairly benefit the wealthiest. As it stands, too much of the roughly $700 billion in tax expenditures the government currently spends help the rich get richer through targeted deductions, preferential tax rates, and other tax breaks. Proposals that aim to inflate those benefits at the cost of workers are very concerning to us. Specifically, the Trump administration intends to pay for proposed tax breaks through budget cuts on programs that help American taxpayers. The Trump plan would result in over $5 trillion at least in lost revenues in the first decade. In the absence of credible ways to pay for these breaks, the administration's budget framework funds these at least in part by cutting funding for crucial programs that support families. Both the Trump and House tax proposals would accelerate growing wealth divide. These tax plans would provide massive tax breaks to the wealthiest at the expense of middle class and working families. They have no inheritance tax, no alternative minimum tax, generous pass-through rates, and a list of tax breaks for a small number of ultra-wealthy individuals, while few benefits go to the middle class and working families. There is no question that tax reform is overdue and that plans for reform should do more for working-class taxpayers. To make sure we arrive at that system, deliberations must be transparent, have to be bipartisan, and include a broad range of perspectives and voices. Inclusivity is more important than ever as the face of America changes. In 2044, 14 states across the nation will be majority-minority. An American consensus on tax reform that includes the perspectives of diverse stakeholders and reflects shared values about tax and spending policies is our best chance at establishing a modernized system that will stand the test of time. Accordingly, tax reform proposals ought to raise sufficient revenue to build a strong economy and invest in our future, are progressive and ensure that everyone, including the wealthy and corporations, pay their fair share, support working families and children and reduce poverty, and promote economic mobility and asset building among middle class and working families. In sum, tax reform is needed and important to all middle class and working Americans, including Latinos. But no tax reform plan should make our government weaker or worsen the economic and wealth divide among American taxpayers. The path to reform ought to be a transparent and bipartisan process, a process that incorporates the views of taxpayers of all walks of life. Thank you for the opportunity to share these views. I look forward to your questions. Thank you.
Thank you, Ms. Rodriguez, and to all the witnesses. Now I'll invite Mr. Reichert to inquire.
Thank you, Mr. Chairman. The chairman's very gracious in allowing members of the panel to go before he asks his questions, and I appreciate that consideration. Thanks to all the witnesses for being here, and especially thank you to the chairman. Mr. Chairman, you worked with my predecessor. We didn't get a chance to talk about this earlier, but Jennifer Dunn was the member of Congress prior to my arrival. And I was honored to follow in her footsteps, as I am sure you were honored to work with her.
Yes.
And she, I know, would agree with you and I that we are at a time in history, we have the opportunity to really make a difference here in the lives of American people, all tax-paying citizens in this country, hardworking Americans. And just as the chairman has pointed out, the complexity of the tax code, and of course your recognition and all the people on the panel's recognition of how complex the tax code is, at least 15,000 changes since 1986. I think your words simplify and rationalize. Rationalize is the word that really caught me. We're looking for a rational approach to this and simplify. This certainty, because I think it would provide certainty, would help Americans invest, grow, and hire across this country and provide for their families. And I'm just interested in hearing from you, Mr. Chairman, what do you think permanence means for the average American worker? You know, so they don't really they look at the tax code, it's so complicated. If we can just explain permanence, because they haven't seen it for so many years. You say 15,000 additions, tax extenders, and all this other stuff going on. What does that really mean for the American people, do you think?
I think it would depend on the economic status of each of the Americans. The more that an American has to rely or depend upon special provisions in the code and watch them change, it's very, very bad. Because to me, you should be able to plan your life without having dramatic changes occur that are going to change everything for you, and you can't anticipate it. So it depends on the condition of the individual as to the impact. But Congressman Reichert, one thing I intended to say in my remarks, which I ran over and I did not get to do, is that the real failing, the major failing of the effort in '86 was the fact that there were major changes that were retroactive. And if I were to give you one caution, do not include any retroactive provision in your tax reform. The retroactivity, and it's one of the major reasons that I led the opposition to the '86 Tax Reform Act, undermined the value of real estate in the country and brought about the demise of thousands and thousands of savings and loans, which cost the federal government well over $125 billion to correct. And that was avoidable if you simply make your changes prospective.
Thank you, Mr. Chairman. Ms. Stout, quickly, Mr. Kind and I have included a related provision in our Small Business Add Values for Employees Act, referring to your testimony, the SAVE Act. How could allowing private employees pool together to provide multiple employer private sector 401ks benefit both American workers seeking retirement security and small business owners hoping to provide this for their workers?
Thank you. I think that pooling unrelated employers would help tremendously with the coverage issues that we have. I work around the Baltimore, D.C. area and work with lots of small employers, and they don't have the administrative staff to be able to handle the complexity that happens when you go to put a plan in place. So pooling these plans together gives them the economies of scale to have lower costs, so their working employees will have access to a plan, number one, but also a plan that is reasonably priced, because you can pool these unrelated employers together. And I think it would make a big impact to the coverage issue we have.
Thank you. I yield back.
Mr. Doggett.
Thank you, Mr. Chairman, and thanks to each of our witnesses. Let me say to Chairman Archer, first, I agree with you completely about retroactive provisions, and it's unfortunate we had some included in the first tax bill we considered this year. While you and I may differ on some aspects of tax policy, I also want to take this opportunity to thank you for your leadership in creating the Archer Fellowships at the University of Texas. There's hardly a semester that goes by that I don't have one of those young people in my office, and I know colleagues of both political parties and a number of governmental entities and nonprofit organizations have them here, and it's a great contribution to us and to each of those young people to be able to get engaged in public service. Thank you.
Thank you for that commendation. We're very proud of the Archer Fellows, and one of them is actually sitting in the back of the room behind the members today.
Great. Thank you. The importance of today's hearing should not be understated. We have gone some 13 months without any hearing anywhere in America, to my knowledge, on the impact of the proposed Republican tax reform on individual taxpayers. And there's a great deal that needs to be explored about that. We're about to leave in a few days until sometime after Labor Day, and in theory, we're about to have a tax reform bill that, as the chairman indicates, could have far-reaching implications for individual taxpayers. I believe we need a thorough consideration of it with a wide range of opinion. I'm disappointed that the testimony of Seth Hanlon from the Center for American Progress, like a witness that I offered last week, was rejected for this hearing. I think we need to be hearing more, not less. And Ms. Stout, I think your testimony is a good example of that. Just the issue of retirement. You are the first person to testify this year before this committee concerning retirement plans. We know that there are millions of our neighbors across America who do not have adequate savings for their retirement. And looking at how our tax code impacts that and what changes we need to make, I think is very important. You've offered valuable perspective, but we could devote one or more hearings just to exploring that question. And frankly, after looking at the Republican blueprint, I'm not sure exactly what is being proposed on retirement. And I think that there are many people within the industry, in the financial services industry, that aren't sure either and have voiced some concern about the changes that may be contemplated by the very vague language of that provision. I would say the reason to look at retirement plans is also it's a significant reason because of what we learn about the way these systems are working today. 60% of American households get 16% of the tax benefits today on retirement plans. And the 20% top income earners get 66% of the retirement tax incentive benefits. So we have a system in which many working families are not adequately prepared for retirement. They have only a Social Security check and modest savings and maybe some ownership interest, some equity in their home. And we need to look at retirement savings in terms of how we will reach out and support more, how we can, as you said, involve more small businesses in being able to offer plans for their owners and their employees, and how this measure affects those individuals is very important. Mr. Rodriguez, I would ask you to comment about some of the challenges working families have in saving for retirement and to comment on what the impact on working families would be if we adopt another huge Bush-type tax cut that's not paid for.
Thank you, Congressman, for the question. It's a big problem, certainly with low-income populations where retirement savings opportunities at work just aren't there. And as you said, it's absolutely right. The tax code incentivizes the most retirement savings for those already doing it. And I think we've got to find more ways to incentivize those at the lower end, those who are becoming more mobile, to be able to save for retirement. So moving around the incentives, and as you were saying, is going to be an important fix. It's part of the reason why we have such an enormous and growing wealth gap across the country, is because of the way that the tax code incentivizes savings primarily accruing at the top versus in other areas. Now, we do have some great concerns about Rothification. I think we should proceed with some caution on that as we look at the entirety of the package, in part because those could be exploding tax expenditures in the out years that really squeeze our budgets in ways that would make funding and revenue really inadequate for the things we care about.
Thank you. Thank you all.
Ms. Noem.
Thank you, Mr. Chairman. I appreciate you holding this hearing today. Too often in the news we hear about multinational, international companies, and we know that all of these companies have tax departments that help them pay their taxes and figure out exactly what they owe. But in reality, most of this complexity falls on hardworking taxpayers, people who struggle to pay their taxes correctly and try to navigate it around the kitchen table and get through the process and do it sometimes with the help of a CPA or a tax preparer, but sometimes they don't have that advantage. We would all agree that everyone needs to pay what is owed, but the current tax code robs people of their most precious commodity, and that's their time. And so I'd like to focus on that a little bit today. Time could be better spent with their families, making their business more productive, investing in new opportunities, local community groups. I talked to one CPA in South Dakota who told me this. He said, as a certified public accountant with 33 years of experience, I've watched the tax code become more complex, making it both costly and difficult to comply with. At the same time, the quality of customer service within the IRS has fallen. As a result, I see within my practice and clients a decreasing confidence in the tax system as a whole. Tax reform gives us the opportunity to address these matters, to ease frustrations, and to restore faith and confidence in our tax systems. So we need tax reform, not just for American businesses, but more importantly for American families and individuals who are struggling with the burden that it places on them every day. Chairman Archer, I'd like to visit with you a little bit. I want to thank you, first of all, for being here and making it a priority, and then all of your years of service as well. But I wanted to ask you what you've seen over the years in an erosion in American confidence in the tax system. But then I want to focus in particular about your perspective on permanence in the tax code, because we have people propose to us constantly, and you've dealt with it over the years, of tax extenders, or putting tax policy in place for a short period of time. And what a disservice that does to a business or a family trying to plan for the future. Could you speak a little bit with your background knowledge about the importance of having permanence in the tax code when we look at reforms?
Well, I'm a strong believer in permanence, but I'm that way in everything in my life. I like things to be in a position and know that I can come back 5 years later and they'll still be there. That is not life, unfortunately. Yeah. That's not the way things work. But there's no reason why the tax code cannot be one that is not forever changing, because things are expiring. Mm-hmm. There are changes that will happen, and taxes will have to be changed at some point. We know that. Mm-hmm. That's a certainty in life, but not one where every time you put something in, you've got to say for revenue purposes, it's going to expire at a certain time, and therefore we're going to change the revenue effects.
You know, I think you make a valid point there, because I've spent my life farming and ranching. And so we've seen in different policies, and when it's come to energy, short-term tax policies to maybe get an industry off the ground or something to get it started, knowing it's going to sunset when it gets its feet under it. I think we do see that at a period of time. But also I know from starting a business from scratch, from running a hunting lodge that I started from nothing, and running a family restaurant and running an insurance agency too, that if I'm going to go to the bank and ask for a loan, they're going to want to know what my liabilities are going to be and what my business plan is. It's hard to do that unless you've got a permanent tax code. So there's a role maybe for both in different parts of the tax code. Is that maybe the point that you are making, that there is a role in certain times?
Yes.
Okay.
Yes, absolutely. And in addition, it seems to me that taxes need to be as simple as possible. And I know that from doing my own tax return. I think your idea of trying to use a postcard for, I'm not sure I would ever qualify to do that, but for the majority of Americans, if they could fill out on a postcard and send it in and say that's going to be it, that has a very attractive appeal. But whether you can do that, I don't know, because that means you've got to eliminate an awful lot of deductions. Mm-hmm. What I worried about from the beginning of my chairmanship of the committee was having a tax code that tried to do everything itself for the American people. I think tax credits are not good. And the idea that, well, we can make things happen in our society by giving a tax credit, I don't agree with that. And I think that complicates the code and makes it difficult for the American people to understand it.
Well, thank you, Chairman. I yield back, Mr. Chairman.
Ms. Sanchez.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. I'm a little bit disappointed that it took more than half a year before we finally had our first hearing on how tax reform would impact families and individuals, but I'm glad that that day has arrived and we are here. It's impossible for me to address everything I feel should be a priority for individuals and families in just a few minutes, but I'm going to just try to hit on a few key points before asking some questions. I believe, and I've said this many times, that a lasting tax reform needs to be bipartisan and it needs to be comprehensive. And I would strongly caution against a go-it-alone strategy that seems to have taken a hold of tax reform for the time being. Lasting tax reform must be bipartisan. History is not on the side of going it alone. Tax reform also cannot be balanced on the backs of the middle class, who already feel like they're being squeezed from all directions. So far, the plans and tweets that I've seen from the House Republicans and the President would result in an astronomical tax cut to the tune of $1.3 million per wealthy household. The people that I represent in Southern California, which the majority are hardworking middle-class families and individuals, would receive roughly 70 cents per day under these plans. And I'm sorry, but 70 cents a day is not going to help those families to better afford child care, elder care, plan for their retirement, or even take a small family vacation. Mr. Rodriguez, I'd like to turn to some points you raised in your testimony. As we know, the young, growing Latino population in this country is going to make up roughly a third of the U.S. workforce in the next decade. This is a population that has unique concerns within our tax code, but they also face the exact same barriers as other working families across the country. Given the younger age of this population, many of them have not even entered the years when child care and elder care expenses are going to become some of the largest burdens and challenges that they face. One of the principles that you highlighted in your written testimony was the need to support working families and children while also reducing poverty. Can you elaborate a bit more on the need for the tax code to address child and family care expenses in a meaningful way?
Sure, thank you, Congresswoman. It's exactly right. I think that the most effective anti-poverty program we have right now is the earned income tax credit and the child tax credit, the refundable portion. And I know that's a bad word before some in the committee, but it's enormously important. And 20 million families receive these credits, and it helps to lift 9 million families above the poverty level every year. These are working families raising children. And so finding ways, looking at the population that is young, hardworking, raising families, and providing and targeting better benefits or incentives and tax incentives to this group who's beginning to either save for retirement or buying homes or doing the kinds of things that are living the American dream, but need more opportunities to do so, and the tax code can do that. So if we can find more ways to do that, certainly some of the other elements, education is key, child care is also very, very key. There's a number of different ways that the tax code can assist these families directly.
Thank you. With respect to the EITC, and I'm glad that you mentioned it, that is a tax credit for middle and working class families. I feel like the rhetoric surrounding EITC paints it as just a handout. And can you explain why that's a wrong way to characterize the EITC?
Yeah, absolutely. These are all working families working very hard, but just happen to be working for low wages. And even in accumulated households don't reach the threshold level to be able to pay federal tax liability, but they pay payroll taxes, they pay into local and state taxes, they pay sales taxes in places, and they're burdened by these taxes. So the earned income credits and the refundable child tax credit is an important way to assist these families. Refunds go to, buying a car, it helps you go to work, or paying off bills, or doing very, very important things that also generate economic activity in all of the communities across the country that many of the members of the committee represent.
And in the final seconds, can you please tell me what would be the outcome of our tax code and doing a tax reform that gives the majority of the tax cut benefit to the very wealthy? What will that mean for
My
our
biggest
country?
concern, thank you, Congresswoman, I mentioned that the wealth gap right now between Latinos and non-Latinos white households is 10 to 1. On the dollar. My worry is that grows to 15 to 1, to 20 to 1, with increasing incentives for those at the very top of the wealth scale. When we eliminate inheritance taxes, when we look at the pass-through taxes, and we're just giving those tax breaks to a very small number of very wealthy households getting large tax cuts, my worry is that increases those disparities when we're having conversations about narrowing and improving equality across the board.
Thank you so much.
Mr. Holding.
Thank you. I want to thank the panel for all of your testimony today. I'm particularly pleased to see Chairman Archer. The chairman served with my predecessor on this committee, Jim Martin. Of course, there was a 30-year gap between his service and my service on the committee, but I'm pleased to see Chairman Archer, and when I see former Governor Martin in North Carolina next month, I'll give him your regards. Mr. Chairman, thank you for having this hearing. Over the past number of hearings we've had, we've discussed in detail the importance of leveling the playing field and ensuring that businesses have a tax code that will allow them to compete here at home and around the globe. And I strongly believe that this fairness in the tax code is just as important to individuals, our citizens, as it is to our companies. Some examples of unfairnesses in the code to individuals, I'll illuminate two. First is the alternative minimum tax, which was implemented 50 years ago, was put in place to address a small number of people who are paying no federal income tax due to certain tax-preferred vehicles. But today, it's clear that this provision no longer addresses the original intent of the law, and instead creates an unnecessary and costly burden that outweighs the benefit of the provision. Similarly, another provision, our current system of citizenship-based taxation, which was implemented during the Civil War as a means to discourage wealthy Americans from fleeing the country and thus depleting necessary wartime coffers. Today, this burdensome regime of citizenship-based taxation has led to record-high expatriations and hampered the ability of our citizens to compete for jobs across the globe. Amazingly, it costs up to 40% more to hire American citizens abroad in many foreign jurisdictions. And so this section unfairly disadvantages our citizens and discourages American multinational companies from hiring Americans to run their international operations. And it also discourages foreign multinationals from hiring Americans to run their operations. So while moving to a territorial system for corporations is an integral part of our blueprint and a necessary part of tax reform, the competitive disadvantage will only become more apparent and grow if we fail to move to a residency-based taxation for individuals. So these are two examples that we have the opportunity to address on the individual level to have a fair tax reform plan for individuals as well as for corporations. Another element that maybe I could get some comment on has to do with compliance. The United States has a relatively high rate of voluntary compliance when it comes to individuals filing their tax returns. But as the tax system has gotten more complex, more and more individuals have to turn to professionals, tax preparers to help with their returns. So, I believe that simplifying the tax code will preserve our tradition of voluntary compliance. And Chairman Archer, do you have any comment on that, perhaps?
Well, needless to say, for one who continued to do his own tax return, simplification has a lot of appeal to me. And I think that it probably, for most individuals, may be one of the major concerns that people have. But again, politically, it is not simple to get simplification. It's something that has been out there looming as an attraction for members of this committee for as long as I can remember. But in the end, we always seem to make it more complicated because the tax code has been used by so many people on the outside as a means of making whatever they want to occur happen in the country. And it's been used, in my opinion, far too much. And And I feel that way about tax credits. The use of tax credits to me is not the purpose of the code. The code is primarily designed to raise the money to pay the government's bills and not to create all of these complexities.
Thank you. Thank you, Mr. Chairman.
Mr. Thompson.
Thank you, Mr. Chairman. Thanks for holding this hearing, and thank you to all the witnesses for being here. Chairman Archer, thank you, and thanks for your previous service to this institution. And I, too, want to thank you for bringing up the issue of retroactivity. And this committee has talked a number of times over the years as to repealing of LIFO, and doing that retroactively would just be a monster for people who have used that tax provision to deal with. I appreciate you bringing that up. And Ms. Stout, I want to second Mr. Doggett's comments on your bringing up the issue of workplace savings and retirement accounts. If we did nothing else in this Congress but provided a means by which people could save while they're working for their retirement years, it would mean so much for retirement security. That would be an excellent outcome. When we're talking about tax reform, a couple of things that are really important to me. One is that whatever we do is paid for. I don't think we can afford to charge our kids and our grandkids with tax cuts that we give out today. And I think we have to insist on making sure that any reform that we do is in fact reform, not just an unpaid for tax cut. And we also have to focus, I agree with some of my other colleagues have mentioned this, focus on middle and working class individuals. This is a group of people in this country who've really been left behind. And we need to figure out how we can incentivize their being able to get ahead and make more money. And I think one area of doing that is to understand the importance of furthering education. Greater education, and all types of education, higher education, career training, low-tech training, whatever it might be, all of that is value added. The more that you have, the rule is the more that you make. And we need to figure out how to help people make more money and get better jobs and get the jobs that people want. So I would really hope that we are able to focus on those types of things in our effort. It needs to be about the American people, and the American people who don't have lobbyists working for them on a day-to-day basis, and the American people who haven't been able to take advantage of this tax code that the chairman referenced as being used to help everybody under the sun but them. Mr. Rodriguez, I want to follow up on what Ms. Sanchez talked about, because it ties in with my concern about paying for whatever it is we do in this tax reform. In the past, you know, we've been down this road before. We've seen this movie before. We do big tax cuts, and then we just pass the bill on to somebody else. We have a budget, it's been referenced already today, that is focused on cutting important aspects of our health care in order to pay for, or to eventually pay for tax cuts or tax reform. Can you tell me how cuts to Medicare or Medicaid will help working class people?
They don't. We have a more recent example, too, in the Kansas experiment of how this really doesn't work and puts enormous pressure on states to be able to provide adequate funding for services like education and workforce and programs that you mentioned that are enormously important to growth and economic mobility in those communities. Look no further than that to show you how this kind of approach to our budget and taxing system is wrong-headed.
Kansas was so bad that they had to repeal what they had done.
That's correct.
And the Republican legislature recognized that to the point where they overrode the Republican governor's veto of that repeal. It was devastating to people in that state.
Absolutely, and if you look at the current budget resolution proposal, or you look at the Trump budget as an example, you can see massive amounts of cuts to programs assumed, 1.3 trillion, and the non-defense discretionary programs. That'll put enormous pressure on all of these program areas. And you're right, in the healthcare bill, we saw 500 billion or so in tax cuts, and of course, 800
I'm fast
billion
running out of time, but
cuts
if
in
you
Medicaid.
would, I'd like to hear from you, or you can submit it in writing. I'd like to see a list of tax reform that you think would help middle and working class individuals.
Happy to do that.
Thank you. I yield back. Thank you, Mr. Chairman.
Mr. T-Berry.
Thank you, Mr. Chairman, for having this meeting. And Mr. Usher, thank you for being here and for your service to our country. The reason I love to be on this wonderful panel is because my colleagues always remind me why I became a Republican on my left. And they've heard this story before about my dad when I was 16 years old and took my first job at McDonald's. And my dad went through all the different taxes that got taken out of my check and said, don't let the tax code change your behavior. You need to save money, and you need to continue to work hard and make more money and get a good job. And today, when I was a realtor, and Mr. Rodriguez, you mentioned this and kind of got me thinking again, because I looked at your bio, and a very good bio. But what was amazing to me, I never realized this until I started my own business. First time in my life that I had to send a check to the IRS every quarter, which is very different than being a congressman or working for a congresswoman or a congressman or working at a think tank, because you put it all on the line and you're actually sending that check to the IRS. Now, what's fascinating to me is today, you mentioned pass-throughs. Today, if you're a successful pass-through, and no one is going to guarantee that you're a successful business owner, in America, you're paying almost 45% of what you make at the top bracket just to the federal government. That doesn't include what you pay to the state in income taxes. That doesn't include what you pay to your local government in income taxes. That doesn't include workers' comp. That doesn't include anything else that our 3 levels of government are requiring of you. So I take issue with the fact that as a pass-through, getting a tax cut is not appropriate. And I learned that from my immigrant father, who's worked hard his entire life, retired now, who always complained about the taxes he paid. With a 6th grade education, as a steel worker, never making a lot of money. What great street smarts, Mr. Chairman. Ms. Stout, your written testimony was fabulous when I read it. You wrote about simplification and consolidation, and you concluded that one does not necessarily equal the other, which I thought was really interesting. And you specifically mentioned the different kinds of employer savings plans, like 401k and 403b and 457 plans. And I've heard from a number of participants, including teachers and firefighters from my district. And in my district, in Columbus, Ohio, Nationwide Insurance is the largest provider of 457 plans in the country. So can you provide some more detail on the different populations that these plans serve, and why it's important for us to, in considering tax reform, to make sure that we don't throw the baby out with the bathwater and continue to allow for the incentivizing of these plans for people to save?
Yes, thank you, Congressman Taberry. As far as the need, there is a need out there to have different types of plans, and we still have a need to keep them and simplify them. But as far as to answer your question directly as to the different employers that are served by the different plans, you know, it depends on what type of plan they want. You know, if it's a small employer, they might institute a simple 401k or a simple IRA versus, you know, the mid-sized companies might do a 401k. The nonprofit world has 403b plans, and then in the governmental side, the 457. So, you know, there are different nuances to each of those plans that solve for the needs of those different industries and those different groups. I think that we still need to keep them, you know, work at simplifying things, but I don't think that one plan solves for everyone.
Mr. Rodriguez mentioned in his testimony that we should better target middle and lower income folks for incentives, and I agree with that. But I found in your testimony what was fascinating is that, and let me get this right, that the largest groups benefiting from 401k plans are employees who earn less than $50,000 a year. In the last administration, they worked to cap that amount of money that an employee could put in.
Right.
Could that actually disincentivize employers from providing those plans and thus benefiting those workers that me and Mr. Rodriguez want to help?
Right. Yeah, absolutely. It would have a huge impact if we took away the incentives of small businesses offering these plans. They need those incentives to get them to the table to even put the plan in place. We have a coverage issue, so we don't want to put anything in the way of getting the small business owner to put that plan out there to help their workers.
Ms. Del Bene.
Thank you, Mr. Chair, and thanks to all of you for being here with us today. Mr. Rodriguez, I'm coming here today from a budget markup where we've been debating disastrous cuts to critical investments in education, in infrastructure, workforce training programs, and healthcare. And so I appreciate the reminder in your testimony that when we talk about tax reform, we should remember that first and foremost, we need to have the revenues to pay for these basic government functions that serve as the foundations for growing a strong and a resilient middle class. Yet somehow over the years, we've moved away from this simple concept, and the code has morphed into something of a monstrosity with layers of complexity that always seem to benefit the wealthiest few, while everyone else is left to wonder how they keep getting left behind here in Washington. Mr. Rodriguez, the Tax Policy Center has estimated that under the Republican blueprint, the wealthiest taxpayers would see an average tax cut of over $1 million, while middle-class families would get around $200. And the Trump plan offers middle-class families a paltry 0.1% of the $1.4 million cut the richest Americans could expect to see. So at a time when my colleagues on the other side of the aisle seem bent on gutting funding for education, healthcare, and other critical resources for working families, do you think that even $200 per family is anywhere near enough to make up for what Republicans want to take away in terms of healthcare or education resources?
No, not at all, and it's a huge issue. We of course do a lot of work in all of those areas between job training, education, and healthcare, and we know there are great needs and resource needs that are there, so we're enormously concerned about that.
Thank you. Chairman Archer, thank you so much for being with us today. I imagine you know firsthand how elusive comprehensive tax reform can be, and I agree with many of the things that you said in your testimony, that tax reform should not be corporate only, that it should be permanent to give people some ability to plan for the future, and that progress is achievable this Congress. But there was one word that was conspicuously absent from your testimony, and that word was bipartisanship. And I believe without bipartisanship that this committee will never achieve any of the laudable goals that you outlined. And I wonder, do you agree with that?
I certainly believe that it's desirable to have bipartisanship, particularly on something that is as important as fundamental tax reform. It seems to me, as with health care reform, both parties should be a part of it. Otherwise, it seems to me that it is not going to be as long-lasting as it should be.
And as you know, I'm new to the committee, but I've done some homework, and the 1986 tax reform process was far more extensive than what the committee has done this year. The Tax Reform Act of 1986 was preceded by 30 days of full committee hearings on tax reform, 5 hearings in the Select Revenue Measures Subcommittee, and 3 hearings in the Oversight Subcommittee, and a full 26 days of markup between September 18th, 1985 and December 3rd, 1985. And the Senate Finance Committee put in the hard work as well, 36 days of full committee public hearings and 6 subcommittee hearings and 17 days of markup. And that's a far cry from what we're hearing now from Finance Chairman Hatch, who just yesterday said that the Finance Committee may not have a single hearing on tax reform this year. So, Mr. Chairman, I'd like to enter into the record the legislative history of the 1986 Tax Reform Act. with your permission.
Without objection, so ordered.
Thank you. Chairman Archer, do you think that the committee and Congress as a whole conducted a deliberative examination of revenue issues in the 1986 tax reform?
Well, clearly, the 86 tax reform took a lot of time to put together. And in the end, it prevailed with some very hard-hitting pressures from the top on both sides, I must say. I was very concerned, as I mentioned earlier today, with the fact that there was retroactivity in there that was going to undermine the value of real estate. And it was put in there, of course, to get extra revenue. And it disturbed me enough that I wanted to offer a motion to recommit with instructions. And I'm convinced that I had the votes to beat the bill if I had been permitted to offer that motion to recommit with instructions. Unfortunately, and I mentioned that there was a lot of pressure from the top, the ranking Republican in the House was called by the White House and told that he could not let me offer the motion to recommit with instructions. And called me into his office and told me that he was going to have to personally take it away from me. There wasn't anything I could do. The power was there. It was unprecedented because the ranking Republican on the committee was for the bill, so he had taken himself out of the process. I was a second ranking, and traditionally I should have been given the motion to recommit. So those things were going on behind the scenes. And in addition, of course, you not only had the president who signed on, but you had the chairman of the committee, who was then a Democrat, who was totally committed to it. And the pressure that he put on in the committee was pretty incredible, too. So you had bipartisanship, but bipartisanship, in my view, did not produce a bill that was in the best interest of the country.
Thank you. My time's
but
expired.
That was my own prejudice, you understand.
Mr. Marchant.
See you.
Thank you, Mr. Chairman. As I go around my district and talk about tax reform, the thing that I hold up at most of the meetings is this postcard. And believe it or not, this postcard is much more popular than the IRS code as it exists. People are intrigued by it. I can't say that they read every single line of it and make calculations in their head on the spot, but the biggest question that I do get in my district about this postcard is, can I fill the postcard out if I file the alternative minimum tax? And I say there's not going to be, in our plan, there is not going to be an alternative minimum tax. So for a great percentage of people in my district, probably the most frustrating part of the tax code is, in fact, the fact that they have to figure their taxes twice. They figure the first go around, and then, of course, they have to go through it again to see if they owe this other tax. What kind of effect, Mr. Archer, Mr. Mckay, what kind of effect does that have on taxpayers when they physically usually cannot fill it out simply for that reason?
Congressman Marchant, I have always been in opposition to the alternative minimum tax. It made no sense. It was not good tax policy. And in the end, had it continued to be in place without change, it would have generated more income tax revenue than the regular income tax. And to me, that did not make any sense. So I think you're absolutely right. I hope you can hope you can do away with the alternative minimum tax. And if you do, you will do a service for the country.
Mr. Mckay.
Thank you, Congressman. Complexity in the tax code comes in many forms. I mentioned before, there's a half a dozen different definitions of the term dependent. There are more opportunities for simplifying the tax code than there'd probably be room for in the eventual tax bill that comes out of Congress. Whatever Congress decides about any particular provision, like the alternative minimum tax or any other provision, our point of view is we will, as an industry, both technology and professional practitioners, show up and serve to simplify people's experience. The postcard is something that this industry is well prepared to deliver for the taxpayer. We mentioned before, it ought to be electronic, but an electronic postcard can be a vastly simplified way of complying. There's a security issue in terms of a piece of paper that goes into a mailbox and so on. But it's actually a more interesting issue, and that is, I mentioned before, the '98 Act that led the way to converting the country to electronic filing. In the course of all that, IRS eliminated from its budget the overwhelming number of paper processing plants, the system of the old days of how paper returns were processed. But there was a huge advantage for the country in it. Putting a paper return into that system, and the IRS employees would key fields from the return, produced about a 20% error rate, whether the error was the original taxpayer or in the keying in of abstracts, about a 20% rate, the study said back then. Moving to an electronic filing system, that dropped to a 1% to 2% rate of error. So there's real advantage in electronic implementation, but whatever the provisions of the code are that you all decide as our policymakers, the ability to simplify that, whether it's in an electronic postcard or any of the other tools that are available, including for simple returns, people can do it now on a phone with an app. Take a picture of a W-2 and very quickly have a return brought in. So the private sector will bring the tools of innovation to this so that this will have the vision, realize the vision that you on the committee and in the Congress choose as tax policy.
Thank you, Mr. Mckay.
Mr. Larson.
Thank you, Mr. Chairman. Thank you for holding this hearing, and I want to thank all the witnesses and join in the accolades for Chairman Archer for his service here. And I like to say from the outset, Mr. Chairman, that I never tire of listening to the story by Pat Tiberi of his immigrant parents. And because actually, you know, on this committee, there are so many stories to be told that make up the fabric of this nation and what we're all about. And I would like to say that in echoing Mr. Doggett's comments, that we do need to have more hearings. And frankly, we need more stories like Mr. Tiberi's so that we can actually get to the gut of what we need to do in terms of tax reform and why we may have our disagreements and procedures. And that would allow me the opportunity to quote my Irish grandfather, who would say, well, you know, trust everyone, but cut the cards. Because oftentimes you may need a reshuffle, and in some cases, as Mr. Roosevelt said, a new deal. And oftentimes it's the vagaries of society that leave government in a position where we have to do things. Ms. Stout, I was specifically aligned with a lot of your comments because I do think we have to provide greater opportunities for people to save. And in doing so, I do support a number of the issues, and Mr. Teaberry talked about pass-throughs, et cetera. I think the way that we have to look at this is where can we assist and help people save? Well, we do have a prime example of that. I ran an insurance agency. I know what it's like to meet a payroll. I was trained at an insurance school where we learned about investment and where we always said there were 3 legs on the stool, right? And one of those legs was Social Security. So at the same time we're talking about enhancing benefits and the opportunity to save, shouldn't we be talking about something that hasn't been touched since Mr. Archer was the chairman, in terms of enhancing the opportunity for people to benefit from a system that has never missed a payment? But when's the last time there was actuarially an increase in the Social Security program? It was indexed back in 1983, and it hasn't been able to keep pace. It's an insurance program. It's not an entitlement. It's an insurance program. Have any of your premiums in insurance gone up since 1983? Yes, of course they have, and everybody would acknowledge that. So I think we have to, because what we saw what can happen, as my grandfather was alluding to, and trust everyone but cut the cards, all of a sudden in 2008, your 401k became a 101k. And without having that counterbalance, which is why we need more hearings like this, the counterbalance of knowing that there is a safety net, that there is a floor, which you also have to contribute to and save for and participate in, but that in the event of taking risk, that your government stands behind you. That was the lesson of the Great Depression, and I believe the lesson of 2008 as well. What other plans would you recommend, Ms. Stout, that we could be using? And would you agree with that assessment about making sure that that 3rd leg on the stool is balanced as well as the others?
Thank you, Congressman Larson. I think absolutely both are important, Social Security as well as saving for yourself, whether in an employer-sponsored plan. I think that, you know, Working America is looking for ways to, whether it's incentives or education on how to save. So we've got to make it simple for them. I work with thousands, I've worked in my 20 years with thousands of working Americans, and, you know, they're struggling with, you know, figuring out their finances and how to put away some extra money. So I think both programs are important. You've got to have that 3-legged stool. As far as other programs, I think a big focus should be on coverage and making it simple for employers to offer these plans.
Mr. Rodriguez?
Absolutely. I think it's both a combination of greater access, also making it easier to save, but also improving the incentives for people to save as much as we possibly can for those target populations that are not saving but could do some more.
Well, I want to thank Mr. Johnson, the chairman of the Social Security Committee, has agreed to have hearings on this where we can put these plans out there, and I think that will only enhance both opportunities governmentally and also from the private sector. We need both.
Mr. Cabello.
Thank you very much, Mr. Chairman, and I thank the panel, and I especially want to thank Chairman Archer for his participation and for his service to our country. I also want to associate myself with some of my colleagues who have emphasized the importance that tax reform has for America's working families. There's obviously a great deal of frustration in this country. We see it play out in our politics. We see it play out on social media on an hourly basis. And I really think that tax reform is a solution, an instrument that can help address some of that economic insecurity that so many Americans feel. And I think we do have to put ourselves in the position of that family that maybe has 2 or 3 kids and has to pick them up from school, take them to school, take them to practice, and then once a year go through this difficult exercise of complying with the federal government and the IRS. So I want to focus briefly on the complexity of the tax code. Mr. Chairman, the Tax Foundation estimates that in 2016, Americans spent over 2.6 billion hours compiling tax returns, the cost of almost $100 billion. Again, that is time and money which could have been used for productive economic activity, or better yet, time spent with family. So as we take on this task of comprehensive tax reform, Mr. Mckay, I want to ask you the complexity of the tax system, where a lot of Americans have to turn to professional tax preparers to file their returns. In recent year, preparer fraud has consistently listed among the IRS's dirty dozen of tax scams. I've been supportive of the volunteer income tax assistance program, where those who make less than $54,000 a year can file their returns with the help of an IRS-certified volunteer. Can you talk about how increasing the standard deduction will reduce the dependence that so many Americans have on professional tax preparers?
Professional tax preparers provide a variety of functions. It's interesting, the National Taxpayer Advocate about a decade ago at a conference on tax reform talked about exactly as you say, the one time a year when the average family takes stock of their financial situation, which is the moment of tax compliance. And she characterized it at the time as a national ritual that she felt there was actually some benefit from, because if people didn't take a hard look at their own finances then, most families would never look at them at all year. And so then the question really becomes the simplification of the experience, that it is less painful, less burdensome, less costly. The industry has worked very hard to create options, and it's an intensely competitive industry with a lot of innovation. Tax services come in a lot of forms, everything from professional tax practitioners to accountants to tax attorneys to do-it-yourself software. There is a growing sense, I think, not only in the industry but from the taxpayers we serve, that they need practical, common sense simplification so that they can make financial decisions about what to do in the coming year for their family rather than come away confused and struggling. I would mention there's actually a couple of programs, the two largest ones that are supported and sponsored by the government are indeed the VITA centers all across this country. And there's somewhere in the area of about 2.5 million or a little more of returns prepared for free there every year. There is also the IRS Free File program, which is service donation by a large number of different companies through the IRS website under IRS regulation and consumer protection rules. That also creates about 2.5 million returns. Between the two programs, somewhere between 5 and 6 million returns are generated for free, in one instance in volunteer service centers within communities and neighborhoods, in the other online that you can access through your phone or through a computer. And between the two, you have significant help at no cost for lower and middle income people. And it's a unique American invention. So many other countries, government does the whole thing as a revenue-raising, revenue collection process with no involvement of the citizen. So the ideal situation would be to simplify, to improve the taxpayers' understanding of their own taxation and enabling them to make better financial decisions for their future, and at the same time take advantage of the capabilities of both tax professionals and tax technology innovations to make it simpler and easier for folks. That's why I said before, if you decide to have a postcard-style tax return, that this industry will deliver that robustly so that it will be something that people have confidence in. And in all likelihood, having that electronic will also add security protections and easy access for people to use.
Thank you very much, Mr. Mckay.
Thank you. I want to thank the panel, Mr. Archer, Mr. Mckay, Ms. Stout, Mr. Rodriguez. Thank you all for your time and your insight. I know I've benefited from comments that each one of you have had, and you bring an expertise and a wealth of experience to the subcommittee, and we really, really appreciate it. Let me try and just make some closing observations and comments, if I could, as a prerogative. First, on process, Ms. Sanchez said that history is not on the side of going it alone, and I wholeheartedly agree with that. I'm not trying to pile on, but my view is the ACA was an example of how not to do things, and so I think we're going to be better off if we try and create a bipartisan approach to this, and there's probably no argument there. Another process point I think is important to make, and that is there's a temptation to evaluate tax reform discussions sort of in a very finite period of time, but I think the committee should get credit for some of the hearings that took place on the Camp draft, similar themes that have come up, and there's been nearly 50 hearings in recent years on tax reform generally. And my assumption is now that we will see an increasing amount of activity the closer we get to a final product. I think that there's also been some discussion about Kansas. This came up last week, and it came up this week as well. And I think there's a lesson for us on Kansas, and that's this. Don't allow a special provision, to create essentially a trap door for pass-throughs, essentially. So there was a pass-through exemption that was allowed, and it didn't happen on the corporate side. And so what happened? You have a system that gets gamed, and ultimate activity doesn't result come out of that. What we're proposing is not to do that, and we're proposing to lower the rates similarly for pass-throughs and corporations, C-corps, at the same level. Speaking of states, I come from the state of what not to do. The state of Illinois has an underlying fiscal mess, a complete disaster. Rather than dealing with the underlying things that are driving it, my state legislature, over the governor's objection, said, hey, let's raise taxes. And here's the net effect. People are leaving Illinois. They're going to Wisconsin, they're going to Indiana, they're going to all the other attractive Midwestern states, like Ohio, and because they've done a better job. And so that's an example. That's a cautionary tale for us on what not to do. The VITA centers that Mr. Corbello mentioned, I think, provide real insight. I attended one. I visited a couple of them in my constituency, most recently in West Chicago, Illinois, at a high school or at a middle school there. Going in and talking to the volunteers, he gained real insight on this issue of complexity. So if you're in a situation where you're visiting a VITA site, you're sitting down, and I was asking some of the volunteers, what's your average interview time for talking to someone? And these are very modestly, situated people. And they said, oh, about 90 minutes. Now imagine that, going through the hassle of 90 minutes, talking to some volunteer, backing and forthing, and so forth, finally to come up with something, and all this level of complexity that nobody up here, interestingly, is defending, and nobody at the witness panel is defending, and yet that's what this very constituency is burdened with. I think that there's also an interesting observation that I'd like to make. If this yielded 70 cents a day, if that was the bottom line, if that was really the number, no, I wouldn't defend it. 70 cents a day per family, I don't think that's really where the action is. The Tax Foundation came up with a study, and I'd ask unanimous consent to put this into the record. The Tax Foundation has, their study shows that there's an increase in 1,687,000 jobs, full-time equivalents, and an estimated gain of, wait for it, $4,917 in after-tax income for median households throughout the U.S. In my home state, $5,256. In Ms. Sanchez's home state, who raised this question, even more than that, $5,536. So that will be part of the record. There's also an interesting thing as it relates to your testimony, Mr. Rodriguez, and I'm not asking you to comment, but it's just an observation that I had, and that's this. A few years ago, I had a meeting with one of the presidents of one of the large Hispanic business organizations. And I think I remember the one it was. I don't want to say it out loud because then if I'm wrong, it's so forth. But he came in and he said something to me which is really interesting, and it made a big impact on me. He said, we're against the estate tax. We're against the death tax. I said, really? That's not what I would have expected you to be talking to me about. And he said, yeah, here's why. For the first time ever, Hispanic families are making serious money in this country. Not all of them by any stretch of the imagination. But he said, why is it when Hispanic families are making money that there's an estate tax? Where was the estate tax 100 years ago when other families were making all their money? And I just leave it at there. It's a very provocative question, particularly coming from somebody who heads a business organization. In order for us to get to this bipartisan approach, we've got to settle out an underlying tension. And it's a tension that surfaces occasionally, and you heard a little bit of it today. And the question is, do we view the economy as a zero-sum game? Do we view that pie as expanding, where people benefit? Or do we view it as something that if someone benefits, then that comes at someone else's expense? There was a subtext throughout a lot of the discussion, a lot of the questions, and so forth. I personally reject the notion that it is a zero-sum game. And Mr. Teaberry, in his observation, was talking about, you know, the tax burden that's out there. We're not going to settle that today, but it is a question that really has to be wrestled with. And we've got to come to essentially a world view about it. Because if all this is a matter of redistribution, then that's one thing. But I think everybody is here saying, no, that's not what we want alone. We want to make sure that there's growth here. And growth comes if we do this the right way. I think we need to explore a great deal more, Ms. Stout, about what you were talking about, credits on encouraging auto enrollment, for example. That would be something very, very interesting. And I think to get back to one of Mr. Rodriguez's key points, this notion of savers getting tapped out at such a low level with very low headroom and very little capacity for them to save, that's something that I think we can vastly improve. And when push comes to shove, this postcard is so attractive and so enticing. And I go back to this theme in many other discussions. Think about the premium that we put on simplicity in other elements of our lives. Just think about that for a second. We want to go through TSA pre-check. We want to go through the easy pass lanes on the tollways. We want to go through the 15 items or less lane, you know, and we'll at the grocery store. We want an expedited process. I mentioned this, my expectation of the airlines app and so forth. We expect this in all aspects of our lives, and yet the one thing that has an impact on every single bit of the economy, the Internal Revenue Code, is cumbersome to the point of absurdity. So I think what we've settled here today is nobody likes where we are. Everybody wants to move somewhere else, and what we've got to do is sort out among us how it is that we do that. But on behalf of our entire committee, I want to thank each one of you for your willingness to spend time with us this afternoon, and I thank my colleagues, particularly these two brothers, for sticking it out to the end. The committee's adjourned.
Nice job, Chairman.
Nervous there?